Righto, money miners. Talking to a fella yesterday, went to a bloody mining company. They asked, who do you use for your core orientation and drill hole direction bloody technology, your gyro? They said Axis, and the company said, that's good because we trust them. That is all the company that geos and drillers trust for gyros and core orientation. That's all we need to say.
We trust Axis. I trust you, Matty, and you have been in the weeds. The trustworthy source of uranium today.
Well, I won't lie. I was watching bloody Suits on the couch last night and a bit of Kazakhstan news come out, and the bloody uranium equities were ripping the market a new arsehole. And, mate, I thought, geez, I just got to sleep because there's a bit of Northern Hemisphere summer, but there's some uranium news, and I'm excited.
How'd your spot holding go, mate?
Oh, she went up a couple of percent, mate. Ding, ding, ding on the spot. But yeah, no, good stuff. We're going to go through it. Boys, you keep flying the lithium flag. You haven't forgot about this integral chemical for the battery revolution, and it's good to see.
Yeah, it's mate, in the doldrums big time. Some sour sentiment. I think JD's doing a bit on IGO and the proposed JV that was with Wyloo that's been kind of canned, and there's just bloody negative news everywhere for lithium at the moment.
Yeah, well, that's positive news for their balance sheet probably, because they won't lose as much money. Maybe.
Well, that's one way to look at it, mate. It's not the end of the world for people buying the batteries either.
Yeah.
If the price keeps going down,
right.
It's not the end of the world.
We'll get into it, but you boys just hold up because we're on to the yellow cake today. Bloody.
One thing, someone was telling me yesterday, why do you guys should, I didn't even know about your newsletter. Why don't you talk about it more on the podcast? And so, mate, I'm just feel the need to shout it out right now in case you're listening to this and you're not on the director's special. What are you doing with yourself?
Moneyofmine.com. That's all you need to know.
Go there and you will get like a little bit of tongue in cheek, all of the news you need to know about the mining sector every single weekday. Easy as that.
Was there another announcement we had to shout out?
Oh, we do. Yeah.
Oh, yeah. Any fundies or whoever's in town the week or two before Diggers, give us a buzz. Come in, have a yarn and a potty.
Yeah, if you're typically based over east, but you find yourself in Perth just before going to Cal for Diggers, then we might do a few of those sort of like round table fundy chats or whatever, and just record them sort of beforehand. So just let us know if
get in touch.
Yeah, get in touch if you come in this way, and what your schedules are.
Moneyofmine.com and fundies call us. Boom. Right, back to it. Cameco up 10% last night. Uranium equities were ripping, though Kazakh, the bloody Kazakh, massive friggin' producer of uranium, the biggest in the world, down 6%.
Wow.
So we'll get into why those differences. Look at you've ripped out the spark charts, Trav.
Look at
the Aussie ones, just bloody ripping and tearing.
They all look the exact same, don't they? All of those uranium equities just shot up on open. Something's happened overnight, mate. I'm glad you're going to tell me.
Right, let's go over what's happened. News out of Kazakhstan, the country, the government. This could have a lot of implications on but maybe global supply, maybe term pricing, all that sort of stuff. Now they've updated the mineral extraction tax, the MET, and so that is effectively the bloody tax that these uranium mines will pay per sublease based on how much they produce.
Is this a tax explicitly on the uranium?
Well, it said for mining.
Okay, so it could impact. There's gold mining out that way.
Yeah, there's other ones there. So
there's some copper mining there too.
But I think there's the stuff I'll go through today is the specifics for uranium mining. So that's going to be increasing. It sounds like was 6%. So that is 6%. Like think of it as a NSR royalty. Like it's like a gross royalty. It's literally the pounds of U3O8 produced times the weighted average bloody spot price times this tax rate. That's what they owe. So it's a gross royalty. So it's bloody big numbers here. So it was 6%.
Yeah.
For 2025, it's going to be increasing to 9%.
Yeah.
and then from 2026 onwards, I'll bring up this table here, the rate will be scaled up based on the production volume. So now it says, the table says tons. So I've calculated the pounds based on tons of uranium in the form of U308, which is multiply it by 2,600. That seems to be how Kazatomprom reports it. So it's either multiplied by 2,600 or 2,200. Hopefully I've got it right. So effectively, anything mined over 4,000 tons of U in the form of U308, which is 10.4 million pounds, will have a gross, like I'll say a royalty or this tax of 18%.
Wow.
On that amount, 18%. So now I'm interpreting the table as those tax rates only apply for the pounds in each bracket, because I would assume if you go over each bracket, it doesn't apply the top rate to everything before it. I'm assuming that. So it's 18% for every pound mined over bloody 4,000 tonnes or 10.5 million pounds within each sublease. Yep. Like it's not the whole of Kazatomprom, because I'll bring up the map here. They've got friggin' mines everywhere and multiple JVs, but like as a whole, Kazatomprom but this arrangement is per sublease. Wow. So, and I'll go through them all later. So, so this is how I interpret it. So like if you get to 4,000 tonne of U, 10.5 million pounds, the combined tax, if you say the rate for 500 to 1,000 to 2,000, yada, yada, will be 12.8%. So, and then if you go to,
it's like calculating your tax payable, mate.
Yeah, exactly. It's like I'm
the bracketed tax
same as tax brackets. So bloody
gotcha.
5,000 tonne would be up in the 15 and a bit percent. So and so on.
It's kind of crazy, though, isn't it?
Additionally, on top of that, Trav, that's one tax that you get. But then on top of that, you have to also pay a rate based on the weighted average spot price of uranium. So if the uranium spot price exceeds US $110 a pound, an additional 2.5% royalty will apply on top of that.
So it probably is just targeted at uranium production. Then it's not the broader.
Yeah, these are the specifics for the uranium part of it.
Far out. Okay, so it's kind of like a bit of a, like they're taxing profitability, but also taxing production in a more egregious kind of way than before. And clearly it wasn't properly priced in.
Well, and you'd think like once they, for the bigger mines, and I'll go through which ones they are that are going to be in that top tax bracket, all those top chunk of pounds are going to be effective potentially, if the spot price goes up as well, at 20.5% taxed on what you take out gross. Wow. So who does it impact? So you got Kazakhstan, you got Kazatomprom, you've got the JV partners. So for Kazakhstan, fucking sensational. Great for the country. More money retained in the country.
Is it? Because sometimes you disincentivise more investment as well.
Well, we'll get to that. Yes. But it's in terms of short-term cash in the pocket, great for them. Kazatomprom, you can give me your opinion on this, but this is the way I look at it. So, because Kazatomprom is 75% owned by the state sovereign wealth fund, and then the 25% is what we see on the stock market, which is the free float. So you'd say for the Kazatomprom equity, like the actual share, you would think it's a negative, because then their cost base is going to go up. They're paying Kazakhstan, the country, more money. So you would think that Kazatomprom as a business will make less money because they're paying a shitload more tax. But since Kazatomprom's 75% effectively owned by the country, by the state sovereign wealth fund, they're robbing Peter to pay Paul. They're just taking the money from here and putting it over there.
Yeah. So the state sovereign wealth fund, is that like owned by the state, or is it owned by the people?
Not sure. Not sure.
Anyway, it is. I think
I'd say it's similar to. Yeah, I don't know that answer.
In some ways, I wonder if because there's a disincentive to produce as much, or like just ramp production like crazy or whatever. you're mining for a longer period of time. So your NPV is somewhat path dependent on how uranium price goes over a longer period of time. Now you retain call options.
Yeah, and I'll go into that because it's like what to do with the incentives and managing where you are in those brackets throughout the life of these mines could play a big factor. Now,
this is hitting everyone. Just by the way, I just had a quick little Google in the background, and it's not set out the same for other metals, but they've upped the charges. For 7.8% on nickel, for instance, 10.4 on lead, 8.55% on copper. They're all upping them as of January 1, 2026.
Yeah. So before I get into the impact on the JV partners, let's go over the landscape of Kazatomprom and who the JV partners are and which are the big ones. So, because overall, a lot of the big operations, the biggest ones are JV arrangements. They're not 100% owned by Kazatomprom, and these are the ones in the south part of Kazakhstan, I think it's the Chisarasu Basin. However you bloody say. I actually put that into Google, pronounced this, and it couldn't fucking do it. I'm spewing. I actually tried. Chisarasu Basin. So if you look at them here, the biggest one coming online is Budanovskoy. You'd hear about that. Budanovskoy 4 and 5.
Yep.
So that's 49% Russia's Rosatom, and the rest is Kazatomprom. And that's going to produce about 15.6 million pounds from about probably 2029 onwards, I'd say. So you look at that amount of pounds, that'll incur around a 15 to 16% royalty on that production, plus the spot price royalty, whatever that may be. So that could be friggin', I'm not sure with the spot price one as well, is if it's bracketed as well. Like if the price is $115 a pound, it's only that 2.5% on the $5 and tiered from there. Not sure how that works. So I'll bring up the graph of like how big this is for Kazatomprom. You can see the light orange is what Budanovskoy will contribute to Kazatomprom's profile. So it's
was massive.
Yeah, it's bloody huge. It's the big humdinger. But that's Russia. So next one is the Inkai JV. So that's about 10.9, going to be about 10.9 million pounds. That's 40% Cameco.
Yes.
So that's, there's 13% tax on that, plus another bloody 1 to 2.5 for the spot price. But like, remember, Cameco are pumping out about 17 million pounds for their share of Cigar Lake and MacArthur River. So 4 and a bit million pounds out of here won't have much of an effect on Cameco as a business for that. Then you've got Catco. That's about 10.6 million pounds. That's 51% Orano, the French utility. Then there's Karatau for 9.3 million pounds. That's 50% Uranium 1, which is part of 10X, which is part of Rosatom, Russia. So if you look at all of them, what's the takeaway for the JVs? I guess there's two elements, I think, where there will be an effect. One is around this so-called structural supply deficit that, the great Mike Olkin and everyone talk about. The other is around the term pricing. And another question is why equities like Cameco and everything ripped last night. So
Cameco, okay,
but like why did they? We'll get into that. Fuck, I've got this map.
Yeah, and I'm curious because it's not immediately obvious if one country has to pay high tax, why that should flow into the prices of the others.
Exactly. So on the long-term supply, exactly to your point before, Trav, this is a massive disincentive to expand or exceed guidance or anything for any of these Kazatomprom JV operations, which involve these JV partners. Even though they'll still make money, it's a big bloody chunk. Like that royalty is huge. It's like, it's I don't know what the exact number is, but it's like what bloody the SQM and all that have to pay the Chilean government to mine in the Atacama. Like so much goes out the door in that royalty when it's that big. But will there be incentive to, as you said, spread the production out a bit, maybe maintain not shitloads in those top tax brackets and, elongate it for longer terms to not be as exposed to that? then like it seems like anything above that 10 million pounds is like there's not much incentive to be better to maybe drag it out a bit longer rather than but because the three operations in question that I mentioned, Budanovskoye, Inkai and Katko, not sure how much control those JV partners would have over what Kazatomprom want to do with it. Orano were 51%. So I'm not sure if that
who's the operator in all of them?
Well, you assume Kazatomprom's is the
operator.
Okay. I know that's the case for Inkai. I assume they're the operator, but Orano do have the major percent, but I assume Kazatomprom are the operator. So I'm not sure how much control they've got to say, because Kazatomprom will want to fucking rip it out as quick as they can because it's great for the country. They get their country cash quicker. But will it be so that's going to be an interesting dynamic to play out. Though remember, this is like a backflip to what we were talking about before. It's all contingent on this new sulfuric acid capacity getting built in country, getting the extraction rates up to where they're going to go. So all of that's still very much in the question. But overall, the global supply of uranium is in this structural supply deficit. This tax might have just put a bit of a even lower cap on what could come out of Kazakhstan, which has the most, you would say, ability to talk to really move the needle because of how big it is. So this might have just put it so they were here, might have just dropped them down a bit. And the pounds have to come from somewhere. Less chance of dialing up the needle to fill in voids.
Yeah.
So
and one of the knocks on the uranium thesis for ages is, if the price shoots so much, the Kazakhs will just ramp production like last time. And here you've got like a tax regime that actually disincentivizes the ramping of production.
Yeah, very much so.
And that doesn't even bring into mention what Mike Alkin said, who you mentioned before, Matty, that, doubting the ability, the operational capabilities of the Kazakhs to even ramp up, even with the asset, even with the resources in the ground.
Yeah, it's just another thing against it, really, which is, So onto the pricing. So as this tax rate is effectively going up from 6% this year, 9% next year, then this varied one 2026 onwards, it's increased the cost base for the JVs. Like no other way to look at it. Their costs have gone up. Will this mean, based on their costs going up as of this change, will they not be accepting term contracts in their current form? Will they want to be negotiating for higher term prices to offset this increased cost base because they've just had a massive chunk of their margin taken out?
Yeah.
And these tax cuts could effectively flow into an increase in this term price for yellowcake. Like, I guess, so who benefits from that? Cameco, obviously they're pumping out a shitload of pounds from Athabasca Basin, but, it'll take a lot of years for them to really realise any benefit from long-term pricing because, they've got contracts already in place and you're looking 3, 4, 5 years down the road beyond existing contracts. So it may help them eventually. But think of the other smaller producers coming online, like Paladin and Boss, like they haven't got a shitload contracted out. This could favour them to lock in some contracts at higher prices. More power given to Fission, which will probably be Paladin, the way things are going. Next Gen, Encore, Denison, Deep Yellow, Bannerman, when they're all negotiating contracts, trying to bring things online. Because look, spot price hasn't moved much, still sitting at around $85 a pound. And look, you'd say the uranium spot price is more of a guide for sentiment than an actual friggin' market. It is so small compared to the term market.
Yeah.
But it does give sentiment on what the market is doing. That's how I've come to peace with the spot market. So
I think that's a good interpretation of the pricing. And if you just picture a cost curve, right? Well, now highlight all of the bars on that cost curve that are the Kazakh supply that might be impacted it, and you've just increase the cost of all of that. And what does that do to, marginal price? Well,
what would you say that this has effectively compressed the cost curve or bring?
In some ways, yeah. I sort of just it's lifting the cost of the Kazakh production in some way, shape, or form. It's like increasing the cost. And when it takes when it's a higher cost to produce, and if any of that production is sort of marginal production, then where does like for them to be profitable, you basically have to have a price set a little bit higher now if that's marginal production.
Yeah, and so Cameco's technically been pushed up the cost curve now because Atomprom's costs are going up.
Yeah, there might be some operations that have
and hence like Cameco. So between getting better pricing and being a lower quartile cost producer, Cameco, up 10% last night. So very interesting. Look, it's, as I said, for a notoriously quiet time in uranium in the old Northern Hemisphere summer, it's good to see some bloody action. I'll tell you, we know how much energy nuclear pumps out. Like once this shit heats up, especially in Australia, holy snap and duck shit, Gerard James is going to be busy at WA water bores. He's going to be flat stick drilling out those uranium paleo channels. I can see it.
Yeah, mate, there's no need to worry about your flow rate when you got Gerard James like unlocking those paleo channels left, right and centre.
Oh, mate, if he's had that much success with water, imagine what he can do with uranium. Like he's just drilling for fun at the moment. Finds a bit of water here and there, a couple of monitoring boards, chuck a few piezo's in, bloody underground breakthrough service holes if he needs to. He's just ticking along doing Gerard James things, and because he knows that when the nuclear renaissance comes, he is going to be at the forefront of delivering it for Australia. Mm-hmm. So, mate, Gerard James, just hang in there, mate. Give him his phone numbers in if you want to lock him in now before he actually friggin' saves the world. I'd highly recommend checking his number out in the show notes. Gerard James, love your bloody work. Good stuff, boys. Fucking love it. Till there's more uranium news, I'll just do ads.
Yeah, love it. Good work, Matty. Good to see you.
I don't know. What do you think? What are you after me waffling on for ages?
No, that was great, Matty. I think the sort of passing comment you made on a bit of a flattening of the cost curve is probably sort of on point, given that we know a lot of those Kazakh assets sit to the sort of left of the cost curve. It just notches, a lot of assets, given how many various JVs and individual projects there are in Kazakhstan, up a bit. So in turn, the whole cost curve comes that little bit more expensive, like you said as well, Trav.
Oh, but is it like that? The lithium one where you look at the actual operation costs and you got the Atacama ones over there, but then you look at the money made from it, they're at the other end because of the royalty. You want to look at
you want to look at your fully loaded costs, right? Chuck all of that on top, because that's what does it matter to be? You keep producing up until you're no longer profitable, and when you have to include all of your costs for that equation. I think you got to look at your total kind of cost curve with royalties and tax and all that sort of stuff in there, and that's what this sort of does. Yeah. The other thought I had when you were talking, Matty, was like how many other subleases in Kazakhstan could be kind of prospective for uranium mines that don't have any plans yet, but it might also incentivize kind of just more dispersion of mining operations. So it might bring forward other projects or other areas and do exploration in other areas where you can have a higher number of operations at a lower tax rate.
Higher number of small ones. I think the whole sublease arrangement there is a world I'm not
familiar with.
Oh, no, that'd be a bloody very interesting one to fucking get your head around. That's a Benny Feingold job, that one. But as you said, for tax purposes, they're better to have 10 3 million pound operations than 2 15 million pound operations under this regime. But who has the power on that? Kazakhstan, because that's not good for them because they don't get as much in the door. Mm-hmm. So. Yeah.
I mean, you could very well make the argument that it's just not great news for uranium, despite plenty of the equities kind of launching last night, Matty. The problem put forward that is there enough uranium out there to address that supply? The reactor builds that we're seeing, there was some great coverage of what they're trying to do across Eastern Europe recently. It's not a check of the box in the sort of guaranteeing supply in future and alleviating any of the concerns that some of the reactor builders might have.
So in terms of, lowering greenhouse gases and increasing nuclear power and like that side of things, yeah, not good. But if you're an equity holder,
I reckon it is good because it's like if it increases the price of uranium at the term or otherwise, then that's an incentive price. Ultimately, the higher the price goes, the more incentive there is to like invest in extracting more of it from the ground.
But it is like, but that's the thing. The uranium price at the moment is at incentive pricing. Like,
and we're seeing some new production come on. Yeah,
it's just getting them fucking permitted and built
exactly. Yeah,
and funded.
Yeah.
Cost of capital.
Yeah, if it ultimately disincentivizes reactor builds, then it's not a good thing. But we're looking many, many steps ahead there, and it's very hard to ascertain what the right outcome is because it does seem like, you know, the far and away biggest player is China, and they're pressing ahead regardless, and a few of these other countries that are building, you know, dozens rather than the one or two reactors scattered around that we're talking about.
I'll be interested to see what happens after this, if there's any ownership sales, because like China, for instance, does have a lot of those JVs, but they're on the much smaller end. So we're like, so they're on the, I think, £5 million less for those Kazakh like CGN and CNNT are in there. So like, you wonder if they might actually buy stakes off your Orano or your Cameco, because if they don't think it's favourable operating them at higher tax rates. Not sure.
There's one other interesting angle, and I haven't looked closely in the numbers here, so I'm probably talking out of my ass, but there are phenomenally big energy projects in Kazakhstan. The likes of Chevron have, you know, invested many billions of dollars there, and tweaking royalties on those things would invariably bring in a heap of money into the country as well. But I would imagine that's something they don't want to play around with because, you know, fighting against the likes of a Chevron and stopping the scale of those projects could cause them a whole host of problems when, you know, they look at what's happening in the uranium landscape and they see that, you know, they own the vast majority of the projects or in joint venture with them. That's something that they can really tweak to increase the overall revenue for the government.
I love talking about uranium because I feel at your boys' level.
I love it, mate.
It's good for my confidence.
Yeah. And not to mention, like, so I think there's second order impacts in some ways too. If this disproportionately hits the other commodities in Kazakhstan, so I think you got a pretty established copper mining scene there. And I'm pretty sure that like whenever you have these like smelters, like you know, a nickel smelter, copper smelter or whatever, one of the byproducts is sulfuric acid. Yeah. Obviously that flows through into the uranium side of things as well. But
yeah, that's very interesting. Love it. Oh, I think we underestimate how fucking big Kazakhstan is. Like, it's bloody huge. Yeah, it's no Australia.
We were talking to someone the other day who's like was pretty bullish the mining regime in Kazakhstan now and sort of saying it's modelled off the West Australian, you know, mining law and everything like that. But I don't think this is West Australian mining law.
No. Bloody interesting. Anyway. Righto, boys, take it away. What's happening with IGO and Wyloo?
This was a bit of a quiet one, but quite a sort of significant announcement, I reckon. So IGO and Wyloo have agreed to put on ice their Kwinana ambition. So they wanted to go downstream. We spoke about it when we spoke with the Wyloo guys over a year ago now, and credit to the West. They actually reached out and posed the question. IGO didn't say this publicly. Obviously, Wyloo's private, so they're not going to say anything, but a spokesperson for IGO said, yeah, it's right. We're essentially pressing pause on the plans at Kwinana.
Oh, to be honest, I completely fucking forgot it was even a plan. We haven't talked about it for ages.
The PCAM.
The whole the nickel side of things.
Nickel died, so we stopped.
Yeah, completely forgot they were even bloody planning it. But yeah, anyway, I forgot for a reason because they're not doing anything now.
Yeah, you're not the only one. So just to refresh people on what they were trying to do, they wanted to produce this PCAM, this precursor cathode active material for lithium batteries, which is essentially just trying to capture a bit more of the downstream here in Australia. It was all the sort of rage a few years ago in a similar sort of vein as building lithium refineries and whatnot. But like you quite rightly said there, Maddie, this was for the nickel side of their business to then on sell to battery manufacturers. So it was going to be a 70-30 JV between IGO and Wyloo. And then they actually wanted to bring in some form of ownership stake a more experienced, mature battery maker and they flagged a capex of $600 million to $1 billion. They got a bit of land allotted to them. Now, this is technically challenging, and obviously IGO have had a fair few headaches in their sort of technical endeavours with Tianqi in Kwinana. Nickel sulfate, which is the sort of step before, has only really been done by BHP. They did that for the first time, in Australia a few years ago. Doing this process, you can imagine, would have had a lot of sort of teething issues, cost a lot of money. So probably is the right call that they're pulling out of it. Not to mention, it's not a surprise, Matty, because where would they get the feedstock from? They've shut down Cosmos. Novo's got a few years left in it.
Oh,
the other assets are, exactly. Like Mincor, Wyloo's assets went on to care and maintenance, virtually straight away as well. So not a surprising reaction by the market at all.
I think it's who they'd sell it to as well. Like, because it sounded like once BHP put that nickel sulfate plant in, it was the whole idea was that why would international companies pay a premium for BHP to convert it into sulfate when they can just buy the bloody powder or briquettes and do it themselves? Mm-hmm. And that was so. I don't think they've word on the decline. They haven't actually sold a shitload of that sulfate. Mm-hmm. Yeah. So I'm not sure if PCAM falls in the same boat there or not. But if it's integrated with a battery facility in Australia, that's a big bloody job.
Oh, you're dead right. I mean, what we've heard is that whatever BHP are doing down in Kwinana has sort of been riddled with challenges and is running way, way, way below nameplate. So not surprising. And then you sort of see what IGO, the stock, did today. It was up a couple percent, pretty much a nothing sort of move. So not surprising at all. Although I do think there's a clear message, and I know Ivan would have been speaking with all his investors, getting his sort of feet on the ground there at IGO, speaking with the sell side, and I'm sure the feedback would be that there is no appetite from any of those shareholders for them to go downstream and do something they have no experience in. It is not one of their core competencies by any means. And clearly they've got the message, although I find it interesting that they didn't just come out and say that. I think that would have been a check in the right box, but who knows? Maybe they were planning to in the upcoming quarterly or at the full year results.
Yeah. I think this is like you talk about IGO and what, like, them shaping themselves as a company in the aftermath of Peter Beaufort's death and everything, and like this is just like an easy win, or it's quick single for Vela to kind of take to demonstrate that he's listening to shareholders and all that sort of stuff. So I think I don't think heaps of work was really done on this PCAM thing, to be fair. It's just kind of like signaling that
bit of a pipe dream.
Yeah. But it's like it's what's it signal? It's signaling that IGO is listening to shareholders and they're not going to just willy-nilly allocate capital to places where it's not getting an adequate return for its core competencies. Where have they done that in the past? Well, there's the lithium refinery, and there's their exploration expenditure. And you could also argue, their whole nickel portfolio. But yeah, so I just think those are the things that are going to be the talking points for them sort of going forward here.
Yeah, and I think, look, Ivan Vella has been given the biggest corporate hospital pass in history, like what he's come into, like in terms of what the commodity prices have done and what like the nickel division pretty much being disintegrated with Cosmos being put on care and maintenance is, all this sort of stuff. I think he'll be looking to simplify and tidy up the business. This is one example of it, and whether it's like divesting some of these nickel things, whoever wants to bloody buy them, I'm not sure. But like, I think there's a bit of a, what would you say, a bit of re-identity, a new identity being made for IGO.
I can think of one that would give that a run for its money for the biggest hospital pass. The unfortunate CEO that came in at Mincor about 6 months before, they got the outcome. They got the buyout, I guess.
Gabrielle. She's the head of Parenti now. Yeah.
Yeah. That was a tough 6 month gig there. But, where do they going to go? I think that's the right question to ask at IGO. And we've heard some sort of word on the decline that there's a bit of a shuffle going around. Like you sort of point out, Trav, we're talking about the exploration budget, the team, the corporate team, potentially a few jobs getting trimmed at, it wouldn't be surprising. I think if you look at Cosmos, they're through the worst of it in respect to how much capital they've sort of wasted. I don't think too much more. They're going to spend, I think, 12 to 15 per annum on care and maintenance. Then you've got these, lumpy checks coming from Greenbushes. I'll rattle off the last 4 quarters. You can just sort of get a feel for it. 577 million, $0, 25 million, and 160 million.
Ooh,
so
need to get them 570s again.
Yeah, that sort of leads me to my point is they shouldn't have any high expectations that they're going to get 577 in a quarter anytime soon. And, they've been criticised for a while at Greenbushes. Obviously, they're not the operators there, but things just haven't been up to scratch. There was that sort of independent report that was done on Greenbushes that we spoke about a quarter or so ago, and you can see just very mediocre recoveries in the sort of low 60s. OPEX jumped in the last quarterly. I note that Taliesin now has a new CEO, so I'm sure all the parties there will be hoping they can, fine-tune things, get things going again. They're talking about CapEx with this 4th concentrator and a tailings retreatment plant. I mean, the fact that you're going to have a tailings retreatment plant is a bit of an indication that the plant hasn't been operating superbly and there's a bit going through the wrong end, out the wrong end. So maybe fixing recoveries can lead to some sort of change in CapEx plan, but I think that is a bit of a long shot at the minute.
No, any time you're thinking of bloody spending CapEx, that's a call to Matt.hall. Like
it is.
That's the first port of call. Those GetWet bladders would be freaking good they're great for a temporary bloody construction water solution. Like when you're doing any expansions.
After the battle scars of, wasting all that money on, CapEx at Cosmos, here you're getting a bladder. You can just roll it up if you put it in the wrong spot, like they'll probably invariably do at IGO. Well, just chuck it in the new spot.
The trouble is IGO's they're not operator, right? But maybe they can just blow a big bladder up and just drop it off at Greenbushes as protest for the fact that they're not operator. Just a bloody.
Who's this, guys?
They could
Trojan horse hide themselves in it.
They could draw a sign on it. You could paint the GetWet bladder with a big IGO logo. We are here.
We know it would last like trying to get saved.
Years, trying to get saved off a beach.
Yeah,
same thing. 30 years, Trav.
How long is it? It's a giant warranty.
At least.
Maybe 3
months. The things last forever. We're just talking about the warranty here. Drive a bloody truck into it. You'd have no luck popping the thing.
Oh, mate, I look at Matt.hall and GetWet. They're like a lotto ticket. Like you got his number's in the show notes. Lotto ticket, you buy one every week. Just call Matt.hall every week. Some weeks you won't win, but geez, when you win big. And that's what GetWet does. They're like a bloody lotto ticket. And like, mate, you might call him and you didn't even realise that you needed him until you call him. So I can
give yourself a free
I like that idea, the big IGO logo on a GetWet bladder. I reckon that'd work. 30 years it'd be there.
Like a pinata.
Yeah.
You get free advertising on Google Maps every time you sort of zoom around the southwest.
That's a good idea, actually. What about the broader lithium market looking inside out, JD?
Yeah, these are the 2 sentences I've contributed today.
Mate, you're on fire.
I know. so there's some bearish sentiment out there. In fact, it was, I think last week the Fast Markets conference was on. It was super recent, and there's this article on Fast Markets website which summarises the themes of the conference. I'll read out the most interesting excerpt to me. Rising African spodumene supply adds pressure to lithium market. Africa will become more and more important in terms of lithium supply, further adding pressure to an oversupply market. Some major lithium producers have established vertically integrated mine projects in Zimbabwe, including there's 4 Chinese names I'm going to struggle to pronounce. Some sources expect more supply to be released from these projects later this year. So it just sounds like there's no kind of end in sight for the for the new more and more lithium production coming online, and that supply is outpacing the uptake of demand at this point in time. And even though you've had prices subside, there's just continual growth in this new supply coming online. Be it of course we know about Pilgangora's expansion. We know about Gulamina's
Mount Holland's coming on.
Yeah. But then there's the Zimbabwe stuff, which no one ever knows anything about until you read something like this, and geez, vertical integration just scares you a little bit when you see that.
and to think the lithium industry is maturing as well in knowledge. So like new supply will come on a lot easier than it did 3 years ago.
Yeah.
Because we're getting better, like the world will be getting better at it as well. So it's could really fill the void a lot quicker.
All the existing ops, they're getting bigger, not smaller. Recoveries over time are, trending as they should be upward as well. So I can't think of another sort of commodity retreat where supply has just continued at such a strong pace.
Yeah. It's just, as we always say, it's
granted, I've got pretty limited experience.
It's bloody abundant. It's abundant. It's everywhere. It's like gold. There's lithium everywhere.
Just like gold, you just go pick it up by the handful.
Yeah, mate. Just fucking, there's no shortage of it.
Go down your local creek and pan some.
Yeah, mate. Pan some spot.
And then there was some interesting sort of news from Tianqi and the Chinese players as well, right, Trav?
Yeah, and that was, look, IGO's partner there, Tianqi, obviously they own their fair chunk of Greenbushes as well, but Tianqi warns of $670 million plus loss over lithium price plunge. Tianqi, right? Tianqi.
US bucks.
US bucks. It's kind of staggering when they are the operator of the world's lowest cost lithium mine, and they're staring down pretty chunky loss. They've got a lot more parts to their business than just mining the stuff, but it's a pretty scary proposition when you read that, and it's a Chinese company, and it's just, I don't know. It's just staggering, I think. Yeah.
It's funny when you look at who's got good exposure to it. Like you forget about Albemarle owning 49% of Greenbushes. Like they've obviously probably tidying themselves up a bit after all the mania, not bloody buying Linetown and everything. I was looking at the graph last
the business.
Night.
Yeah, they've got their balance sheet's like pretty busted up in a lot of ways.
But who's got the most exposure to the best one in the world? It is Albemarle. Yeah, but they got a lot of other shit as well.
Yeah.
Yeah, and Ganfeng too, add to that list of struggling Chinese players, Trav. They're down 30% for the year. They announced that they'd have a half-year loss, just like Tianqi, of sort of circa US $200 million. So bad day all round for players in the lithium market.
Well, I think they're like, I looked at their graph last night. They're going from like 80 down to 18, like Ganfeng. They're being hemorrhaged, not over this year, from the highs, but they've just been hemorrhaged.
Tianqi year to date down 45%, so a bit of a tough ride. So to sort of bring it back home to IGO, I kind of have two questions for where they are right now, and one of them sort of relates to Kwinana and the downstream lithium refinery there. And this is related specifically to Train 2. So obviously they got Train 1 up and running to a small extent. It's not exactly been a glowing success. And the indications are that they're going to press go on Train 2. FID was meant to come through in the first half of this calendar year. So that's been and gone, hasn't happened. Not surprising in the face of the lithium conditions that we've just mentioned there. Obviously, I'm not a industrial chemist. I don't exactly understand where the problems are derived from in the plant there, but it would seem puzzling that they'd press go on Train 2 without having solved and shown to the market that they can execute and operate Train 1 at a seriously higher standard than where it's been operating at the moment. And I'll sort of caveat that with the point that there was a question in the recent call that was answered with words to the effect of perhaps having Train 2 could lead to more optimal sort of outcomes and help the sort of performance. I'd have to hear from the company. They weren't exactly confident in that either. They said they're still doing studies there to try and understand it. So they sort of left me with more questions than I had beforehand. But I'd expect a lot of news to come out around this one in the upcoming quarterly.
Question for you, JD. Are they in control of this decision, or is this decision made in the joint venture effectively by Tianqi?
I mean, it is owned by TLEA, so 49-51%.
I reckon that they're hamstrung here too.
I dare say, but they have a board, and how decisions are made there. I'm sure they have their representation on that board, and they can have some sort of influence about how they go about it. And does Tianqi want to just piss away money as well? I don't think so.
Well, yeah, it's like Tianqi has been pissing away money if they're looking down the barrel of losing 650 million themselves this half. And sometimes there's like a strategic rationale for that, right? And it's kind of like, if that's the strategic rationale, then so be it.
I mean, at the end of the day, they are 49% owners, so I don't think they have the final decision. But who knows? I'm sure they can sort of push their weight around a little bit. And then the second kind of question, which I think we alluded to in the last week or so, I can't quite remember, is are they going to do any more M&A? And
definitely.
that's a pretty open, that's an open-ended question. Will that be a development type play? Will that be a producing mine? What sort of jurisdiction will that be in? They're very much a WA-centric player. And maybe the most exciting question, what commodity will they get involved with? So they've had gold in the past, nickel obviously, lithium now. Ivan, the new CEO, he's operated in iron ore, copper, a big sort of stint with Oyu coal and aluminium. And, if they are to diversify, I think the first sort of commodity that comes to a lot of people's mind is copper. But if you actually kind of think through it, I don't really see it. Like every man and their dog has been looking for a great copper asset for a number of years. I don't see IGO having, phenomenally deeper pockets or more expertise or anything. I can't see them going to Zambia or Peru or wherever and picking up an asset. So that kind of leaves me thinking, I don't know, do they double down on lithium where they have, hopefully picked up a bit of expertise along the way? I'm not sure. What sort of thoughts do you guys have on the M&A approach that IGO might bring to the market?
Yeah, I double down on copper. I take the other side of you because they do have funding capability. They can borrow a lot of money if they wanted to. They could raise equity as well, and I think they would, like if they actually have a negative outlook on lithium for longer, then maybe they want to use their scrip while it's valued highly and just buy, overpay for a copper asset in some way, shape, or form.
Where do you think they'd go?
That's the hard question.
I reckon they're going to the West Arunta.
For what sort of asset?
Well, they own, what are they? Top shareholder in Encounter. And this is an opportunity for them to reinvent themselves. Imagine if they went for WA1.
Ding, ding, ding.
Ding, ding, ding.
Yeah.
Like, because where would you go for as you said, they're not going to go small scale copper. They'd have to go like what's that one? Is it Caravel, the one in WA, the bloody big, large? So they'd have to look at a big,
then your
large,
capex is horrible on that thing.
Exactly.
I reckon
they need a big project.
There's one deal that solves all their problems, in my opinion. And I talked about it on yesterday's interview, which we're going to air tomorrow. But it's, mate.
Oh, Mac.
Buy Mac, pay a premium for it, and then let Mick run the pro forma. And I know Ivan's new and he's just getting some like runs on the board and all that sort of stuff. But Mick has a lot more history creating shareholder value over the long run, and let him run an enlarged vehicle that has more funding capability. It can do some real creative, funky M&A, and then you've got your proper battery metals kind of vehicle. You got copper added to the bow, and I reckon that would be a much more exciting IGO is if it was and we know IGO wanted to buy Mac, like they were the pseudo underbidder of that asset, back in the day. That's the deal that solves IGO, I think.
Right, I'm going WA1, you're going Mac.
Yeah,
we've got a carton on.
I bet in the next year there won't be a deal.
I reckon we'll see him get rid of some stuff anyway.
I reckon though there will be real attempted deals. And remember when Fisty said the status quo is not an option. It just rings true. I just think there's very few companies out there that are hungrier and maybe willing to pay as much for a copper asset as IGO, and that's what it takes to maybe get a deal done, even if it's not the best asset or for a price that's too high.
Yeah, I do think you're right. I do think they're hungry. I just think getting a deal done is phenomenally hard, and the copper space is probably more picked over than any other commodity out there. So it just makes it a bit hard. But Matty, I love your sort of out the box thinking. That's certainly not one I'd thought of.
Or that, or Telfer Haveron is another one. Who knows?
Who knows?
It's recorded.
Maybe Ivan does.
Ivan, give us a buzz.
Beautiful.
No, you can't do that, can you?
No, you can. That's right. You can give us a buzz.
Can you tell us what you're looking at?
Just come on for a chat. I'd actually be
Come
interested.
on for a chat. Oh, hi, Tim Hoff's just walked in the door. Oh, right, good stuff. Bloody, it's like I was gonna say something, but I don't know. I'm sure it was good.
You got to thank the bloody partners.
I do have to do that. How fucking good are they? Geez, tell you what, since Axis Mining Technology's come on board, I've got a new lease in my life. Bloody love it. Champ Gyro, Champ Ori, give them a buzz. Driller and Geo's best friend.
The only time it's okay to say the word champ in Australia.
Yeah, I know. Some people really hate that. Are you a person that...
Hate it.
Really?
Hate it.
I've worked with a guy in Queensland. He says if anyone would literally want to punch someone if they called him champ.
Yeah.
So what did I do? Sorry, champ. Righto. MMS, the preferred mining contractor. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Water Bores. They might be actually called WA Uranium in the future.
Yep.
WA Uranium Drilling. But anyway. And K-Drill and our goods a bloody spark chart. Great collage of spark at the start. Hootaroo, money miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.